Hey everybody, Frank Finance here. Hope you're having a wonderful day. In this video, I want to look at some of the most popular IPOs of 2021 and see what they've done in terms of a stock performance up until now. We're going to look at the IPOs of Rivian Motors, Lucid Motors, Didi, SoFi, Bumble, Robinhood, Coinbase, and Roblox. All right, so first up we have Rivian Automotive. They're currently trading at 64.51 and they're down about $65 or about 50% in the last, this is, a little over 3 months. And if you want to know a little bit more about Rivian Automotive, I have a pretty good stock analysis out there. I'll leave the link in the description below. But currently right now, the way they'd have to deliver they basically would have to deliver upon all their expectations and gain a huge market share in order to be worth the valuation they were at their IPO. And even where they're currently trading, I believe they're still overvalued. So this one is justifiably going down, and I think it will continue to do so until it has a more attractive price, and that is more inside of my stock analysis. You can look at that there. Moving on into Lucid Group, this is another automotive company. They IPO'd via SPAC, and they, I believe, are actually up since their IPO. Now this one happened, obviously the SPAC existed before 2021, but when they did IPO, they've been up and they've stayed up fairly well. Now I haven't looked into much on Lucid Group, but they seem to be doing fairly well. I believe they actually have deliveries, unlike Rivian when they did IPO, they actually weren't delivering cars. But I'm not an expert on Lucid Group and I don't have a stock analysis out there, so I can't say whether this is valued correctly or incorrectly. But I will, if you let me know down below in the comments, let me know if you want me to do a stock analysis on Lucid. I'll definitely prioritize it depending on how much traction I get there. Next up, we got Didi Global. I've done a lot of stock analysis as well as videos on Didi. This is a stock I actually bought, and my average cost base is around $10. So I'm down over 50% on this position. Lost a couple $1,000s on this one here. I was pretty bullish on it. I believe really this stock has definitely gotten beaten down. I don't believe because they were overvalued, mainly because this is regulatory. They got their app removed from the App Store. It's still not there. Basically, they've been cut off at the heels, or cut off at the knees by the Chinese government, and they haven't been able to compete since. So right now, Didi Global is not a buy. Technically, that I believe the stock price is a steal. However, there's so much uncertainty around China. This is a high risk stock, and even the upside at this point is getting a little sketchy because, there's been a long time. I mean, we're looking at close to 6-7 months now since the app was taken off the App Store in early July, and so I think Didi Global will continue to have risk with it. I'll probably put another stock analysis out there in the future, but right now I wouldn't be an investor, or I wouldn't enter into this position unless you're okay with the high level of risk that comes with it. Next up, we have SoFi Technologies. Now, this is one, sorry if I butcher his name, but Chamath took public via SPAC. Looking at the performance of this over since they IPO'd, they're looking at they're up 33%. So this is one of the IPOs that is up. So overall, they've done fairly well. Pretty high, pretty big difference between their highs and lows. There's a 40% drop there. So if you're going and buying it at the highs, you could see a big drop. Now, this is a fintech company. It's kind of like a neobank where they just basically have no store presence. It's all online. Pretty popular. Fintech seems pretty hot right now for people to be investing in. But it does look like if you've been buying in the $14 range, you can make a quick 50%. And there's been a couple opportunities to do that. And there could be an opportunity for it to happen again based off of the trend here, or the pattern we're seeing in the stock price. I might do a stock analysis on this one to look further into it. That could be intriguing. I haven't done one yet to see whether this is a good price or a bad price, but this is an interesting one, and one of the few, almost two in every three IPOs in 2021 ended negative. It ended lower than their IPO price. So this is one, this is in the 33% that actually, closed higher than their IPO price in 2021. Now moving on into Bumble, and I did a stock analysis on this one versus Match Group, probably 6 months ago, maybe 5-6 months ago at this point. Now Bumble's currently trading at $30, and they're down about $45 or 60% since their IPO price. So you invested pretty much any time in this stock, you're down. The main concern here was with growth for Bumble. They did have another app I talked a little bit about in that they have another app that I thought was interesting, and it was kind of like, I think it was kind of like Tinder, that I thought had some potential. However, the concern I have with this one is that where are they going to find growth? And that the other app was not necessarily Bumble, the app, the other app that they own. Kind of had that Tinder-like revenue generation. So just one note, fun note here is that Match Group, they make most of their money on Tinder, not actually on Match.com. So just one thing to note there. So I'll summarize up in this Bumble is I think there is a price that you may want to buy Bumble. I'm not sure what that is right now. Probably do another stock analysis on this one just to see what I think a fair valuation is now that what their market cap is around 3.8. I'll have to do another stock analysis on Bumble, but right now I'm not. With what I know right now, I'm not buying. Another big IPO, really large IPO in the U.S. this year was Coinbase, and I believe they IPO'd around $80 billion, which is a really large IPO, somewhere in the $300 range. I know they popped up real fast in the IPO, and then looks like they traded sideways for a good part of the year, had another big bump where they went up 50%, and now since that high they're down 46%, but since the IPO down 41%. So I think Coinbase has some opportunity. It's a good platform at least. I don't know how they generate their revenue, if it's market flow, what exactly they're making their money on, but it is probably one of the best crypto exchanges out there. So in that alone, it doesn't really have a ton of good competition out there. The major exchanges or the major sites where people operate their brokerages like Fidelity, Schwab, they're not dabbling or really getting involved. But if one of those players jumped into the game, I think Coinbase may see some issues, but it could overall, I think, lift all boats. So I'm not saying Coinbase is a bad company. We're just gonna have to see how they're making the money and why it makes sense. But based off of their P&E here, doesn't seem like a terrible price considering it's a company that probably has decent growth prospects since it's fairly new, and user adoption on crypto, I would say, is fairly small. But enough of that. I'll move on to Robinhood. So Robinhood, another brokerage app. They really started the zero commissions, and they really make their money on money for order flow. And there's not a lot of, honestly, they don't really make that much money. And if that gets disrupted by any legislation or it could cause them massive issues. And the other problem is there's not a ton of growth here. Now that the major brokerages like Fidelity, Schwab, everybody's charging zero commissions on trades. And so there's not a huge, for me, push to go to Robinhood because you're not really getting much benefit out of it. Your major providers they have tremendous platforms. I really personally love Schwab. That's just me freely saying that. There's no endorsement or anything. It's just I like it. So, and then Robinhood had some issues with the Reddit crowd and with GameStop and GME and AMC over the last year, where they halted trading and everybody was up in a stir about that. So there's some things that happened last year. So anyways, Robinhood's trading around $12, $13 right now. They're down about $21 or 62%. quite substantial drop if you got in the IPO, and pretty much anytime you invest in Robinhood, you're pretty much going to lose money unless you got it right at the IPO, ran it up to the top, and you could have made 100% on your money and get out while the iron's hot. But other than that, you've lost money on Robinhood, and more than likely it will continue to go down. Looking at Roblox, this company actually has a lot of intrigue. I'm interested in it, and I don't quite understand everything with Roblox, but you can tell that over the course of their IPO, they're only up, or they're down about 1%. But that's recent, right? They actually pretty much were up decent amount for most of their IPO for throughout the year, 10 to 20%. And then, over the course of November, December, they were up, what is this? 90%, 40%. And they've been on a very steep decline. So if you got it up here in the $134 range, you're down 50%. So hopefully you're not this guy up here, but I'm sure there are a few folks watching it that did buy here. But Roblox does have some intriguing. It is intriguing. I think that one of the things here is, as the cool thing about Roblox is, while everybody's going into this metaverse, and I'm hesitant to even use that term, it is kind of like people go out, they build things, but it enables people to go out there, build stuff, and then resell it in a virtual world. So it's kind of like a platform for people to build out their own version of the metaverse, if you will. And I know it's probably a really terrible example or terrible way of explaining what Roblox does, but I think it is a cool platform. I don't know how much it translates into older generations, like 40 and above, 30 and above. I'm not really sure how that plays into it, but I can definitely see the appeal for anybody, like especially if you're starting out very young. Like that is going to have tremendous value over time, I think, for people who get to build their worlds over time. I mean, that would be really cool. Also, a platform to be able to play a game and earn money. That's pretty sweet. So I can see the attractiveness in it, and I will keep my eye on this. I'll probably do a stock analysis on it in 2022, because now that it's kind of gone back to its IPO price, I am interested to see which way I think it's going to go from here. So for the 8 IPOs, I covered 5 into the year negative and 2 positive. Rivian was down 35%, and I believe there's some significant downside for them to continue. Lucid Motors, I'm going to have to do a stock analysis on them, but they were up 281% since their SPAC, and then the IPO was announced. Didi's down 69%, high risk. I'd be very careful if entering into a position on that. SoFi up 33%. This was one of Chamath's investments through SPAC. Bumble, the largest IPO with a woman CEO, I believe, but they are down 60%. Coinbase, good platform. Let's see where they go from here. They're down 43%. Robinhood also down 63%. I'm not very attracted to Robinhood at all. Roblox, interesting concept. Let's see what happens. They're down 1%, but mostly we're positive through most of 2021. The end of the year positive as well, but as of today they are negative. We'll see where they go from here. Now a couple thoughts about the IPOs, or these popular IPOs. So in all, you can see that 2 out of the 8 actually ended the year positive. This is in line with the average. 33% of IPOs in 2021 ended the year positive, and 66% ended the year in the red. So more than likely, if you invested in a SPAC, you're probably going to be on the negative side, and that's just the way it is. One of the things you have to keep in mind with IPOs is that you should probably kind of wait and see, or at least do a lot of research up front if you plan on buying at the IPO. Investment companies or investment firms, when they're basically what they're doing is trying to raise as much capital for these companies at their IPO. So they go around, they build excitement, they try to get as much money out of the open market as possible. And that means sometimes, and actually a lot of these times, as the market has judged them now, that 66% of the time they were overvalued when they IPO'd, or at least to this point, the market has deemed them as such. So that's just something to keep in mind as we move forward. You need to be careful when a company IPOs, especially if you're not planning on holding it for the long term, or you don't quite understand the investment and it's just you're going with the crowd. So just keep that in mind. The last thing I want you to do is lose money just because of something that's hyped, something that you don't quite understand. Make sure you understand something and make sure you understand your investments before you put your hard-earned money into it. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. My name is Frank Finance. Out.